Hi, I'm Nigel Baker, and you're listening to The Future Financial Advisor. We're running this podcast to create an avenue for advisors to share their thoughts and their best interests, and really trying to attract those advisors who want to take the industry forward. What we want is great businesses who are really making a difference and really making a big impact to their clients, and we want to know how they're doing it. So in this series, we're going to be discussing the latest digital platforms, some best practices, evidence-based investing strategies. We want to give financial advisors the tools they need to help more investors improve their financial well-being. So if you're ready to take the industry forward, modernise your advisory practice and reach a new generation of investors and the new generation of advisors, then this show is for you.
So all our recordings and podcasts are general advice. All the content, all the people interviewing here, it's all their own opinions and all their own views. In no way does it constitute any personal advice or recommendations. If you need specific advice, please go and seek an advisor. Thanks very much. Welcome to today's podcast. In today's podcast, we continue the theme of interviewing some experts. So Scott is a very experienced advisor. He joined the industry from chartered accounting, started his own firm, which has grown, has got a very successful practice now in Sydney, Australia. I think if you're in the industry, an advisor, been around a while or new, you're going to learn a lot from Scott as we talk through some of the key issues that are facing the industry right now. How do we serve more people? How do we deal with less advisors in the industry? Technology, all the compliance, all the red tape, all the things that you out there as practice owners and advisors are dealing with. And I think to hear from someone who's living and breathing this is fantastic. So a big thanks to Scott for sharing his own story. And I think, again, you're going to really enjoy today's session. And thanks again, Scott.
Hey, good morning, Scott. Great to have you on board today. How are you?
Yeah, I'm good. Thanks, Nigel. Thanks for having me on the show.
Great to have you here. So the first question I'd like to ask, Scott, is, if you tell me about your story as an advisor.
Well, Nigel, my story as an advisor is I originally started as a chartered accountant for the first 10 years of my career, and then the last 20 I've been working as a planner, helping individuals achieve their goals and objectives. And I've been through a lot of different phases in the profession, which started out probably more investment focused and working with individuals about their returns and managing their money. And over the 20 years, I've been advising individuals and people who are pre-retirement or building their assets, including people who've built wealth. It's evolved in many ways, and I've spent my whole career as a professional advisor trying to optimize and work out the best way to manage people's expectations and enable them to achieve outcomes that lets them do the things that they want to do in their lives, rather than just historically working out investment returns and a rate of return on people's money. So it's changed a lot in that time, and I've enjoyed working with hundreds of people, and I've retired hundreds of people, and done that under my own professional advice business as well as other operations.
Great. And it must be very satisfying when you get people to retire. So is that the most, is it the part of the work that you enjoy the most, being an advisor?
Yeah, it is. For me, it's actually the work I enjoy the most is sitting down with people that are 5-10 years out from retiring or wanting to be financially independent, and setting up a structure and a framework around their situation and helping them do certain things and put into place certain strategies that gets them to that point that will achieve that financial independence. Because the vast majority of people don't know what that looks like, and it's building a proper framework and putting in place various strategies that include paying off debts, building other assets, putting money into various structures, including super, and working out what it actually really means to them and what the future really means to them, and then following it through until they actually reach that point, and regularly reviewing that, and then having a clear focus on what outcome that will achieve. And it's different for everyone. Every single person is different, and it really depends on what their true values are and what's important to them about money.
What sort of process do you take clients through to, because it's a very confusing part of people's lives. Obviously there's a lot of noise and jargon and things like that. There's there's the fear of coming across a Melissa Caddick or something like this. So how do you do that? How do you get people to believe in that the industry is going to look after them?
Yeah, I mean, that's a very interesting one, Nigel, because as you and I've been around a long time, you see various people who attempt to do certain things and it all comes undone. And I guess the first and foremost thing is to make sure, and by the time I would meet a client, they know that I have the appropriate skills, licensing, and compliance around the business, because that usually they're there in the first place as a result of someone recommending us or myself. And then the process I take them through is really starting that initial advice, which is not giving specific recommendations, but working through what's important to them and at a very high level, and looking at what things really matter in their lives. We really don't talk through investments at all for the first few meetings. It's all about creating that framework and what great looks like for an individual, what their best life would be, and what is ideal, and sort of putting parameters around that and putting a focus on the timelines and specific things that they're willing to trade off to achieve outcomes that are most important to them. And I do that in a very simplistic approach. I guess capturing that information and building the broader plan has been the biggest challenge the last few years, and ensuring that we are able to get all that information and all that detail into an appropriate form and system that is not just high level. It is able to be drilled down to the information that we need and can use in the future to build their plan and manage their plan.
As you said, I mean, you've been doing this for a long time, and you've built a great business, and the industry's gone through a lot of problems. What are you finding at the moment is some of the big challenges in the industry? Obviously, markets are a bit volatile as well, but what are you and the team dealing with day to day at the moment?
Yeah, I guess the biggest challenge is that to try and deliver advice, comprehensive, effective advice that's meaningful, we need to ensure that we're delivering it in a way that meets all the best interest duty requirements and the requirements around, I guess, the current laws and regulations. That a lot of the work that we do in the background and preparation and research, analysis, comparisons, modeling scenarios, data input, data management, having accurate and meaningful information, a lot of that is not really appreciated or seen by clients, because they're outcome driven and they want results, and they often really just want to know what they need to do. However, the challenge we have is capturing, processing, and managing and delivering meaningful information that is useful, that protects the clients, so that they have the correct and accurate and appropriate strategies in place, resulting on correct data, as well as making sure that we as a business, as an advisory firm, are delivering consistent, compliant advice, that there's no risk that the client's going to be impacted whatsoever in terms of their investments, their money, and expectations around returns, around where they're going to get to. And all of that centers around having a model within our advice business that is foolproof, and it captures every step of the advice process and can be tested in every way, that the client can actually rely upon it, and that they're not looking at outcomes that don't come to fruition. And I go back to many years ago, when the limited amount of information that we would capture, not only around what the client wanted in the future and where they wanted to get to, but the depth that we didn't go to, that then created situations where clients' expectations weren't met. The promise and the outcomes that we believed would be achieved were less reliable. So it's moved a long way in that time, but you need to have the systems, processes, and set up to be able to deliver that.
No doubt, it's a lot of time, a lot of thinking, and for those clients, it's a fantastic detailed service that really is personal, as you talk about the whole best interest. So no doubt that's a lot of work of your team and putting those processes and things in place, and the media and the regulators, everyone talking about this sort of problem that there's for those people who are able to get full complex advice, cost of service gone up. So I'm sure you've experienced that in your own practice, that you've seen that, therefore, that cost to serve increase quite dramatically as a result of all that over the last couple of years?
Oh, definitely, yeah. I mean, it's been going on for a while where we really can't look after the clients that perhaps we may have a great relationship with them, or there's a reason that we were hanging on to them. We felt there was an obligation, and they may have smaller account balances. They may not be in a position to pay fees. They may have been a couple that became one person. They could be family, siblings, or children. And we would hang on to various accounts, and for a number of reasons, including each client needs to be treated equally from a compliance point of view, we've ended up not being able to do the family and friends favours that we used to in the past, because each person in the family group or the broader group or a family business needs to have the same level of background compliance support process. Even if they've got $50,000 or $500,000 or $5 million, they still need to run through the same process. So that means their needs, their objectives, their risk profiling, their knowing the client. And so sadly, it's actually become quite difficult for us to sort of say to a family, we can support your kids, because we can't. And we now, in the past, you might have got a bit of trailing commission or something on the 5-10 years ago, might have been some level of payment on a small account. That doesn't happen. And there's a liability and a responsibility for us, even if we are the advisor on an account. So it's to deliver and to have an effective outcome, we need to have a proper plan in place, a compliant advice document that's completed, which costs money to prepare. And so the cost of getting a client from coming into our advice services on board has significantly gone up. It's probably gone up about 100%. Therefore, it costs a lot more for us to bring a client on board and then look after than it did in the past. And once again, a lot of it is not seen by the clients. So we're also needing to communicate the value and what we're doing for them and why in a more effective manner as well, because people aren't prepared to pay $5,000 for initial advice, $10,000 for initial advice, unless they can actually have that clear communication and transparency around what you've actually done for them.
I suppose in some ways that's a good thing for your business, because it means you're looking after more complex people, whether that means more money, more issues going on. I mean, they're the sort of people you want to help, and that could be a good thing in a way. Frustrating that you can't help some of those people perhaps you want to help, but the costs are just prohibitive. Yeah?
That's right, yeah. I mean, having a lot of people with smaller accounts and smaller revenue becomes quite problematic, unless you structure a business that you can look after those clients in a way that's effective and cost efficient.
So is that a problem that should be solved by the government or by advisors, or how does it's like
that? It's interesting, that one, because as the research shows, every year only 20% of Australians actually obtain advice, and that statistic has not changed for decades. That 80% of people are under advised. The primary issue is that now that we have moved fully to fee for service advice, and the cost of delivery is not absorbed through product, which it used to be, and subsidised, cross-subsidised. So often wealthier clients would be covering the cost of those smaller clients. I do believe there's the government, through whether it's through industry superannuation, whether it's through education, have a level of responsibility for financial literacy and financial support and advice, because they effectively have made it a lot harder for people to access that. And if the stories of people going in to try and just sort out a bit of super, they go, the financial planner, wanted $3,000, $5,000 just to tell me whether I could put some more money into super and how much I should put in. it really defeats the whole purpose of what the government's trying to achieve of getting people to build their super funds. So there is lower cost solutions out there with limited advisory capability, but it still doesn't help the long-term planning and what people need to do and how much they need to save and how much they need to build up and what their cash flow should be in the future. And that broader need, I guess I would think an easy step for the government would be to make it tax deductible for financial advice, initial advice. Make it tax deductible, or there be some sort of rebate through super that they get, or a contribution or a co-contribution for superannuation advice or retirement advice. That would be one step in the right direction to help make it more freely available for people to utilise. Whereas at the moment, a financial plan fee is a bit like legal fees, and it's not tax deductible, nor is ongoing advice through super funds. So it's not really something that people rush towards to do, whereas their accountants' fees are tax deductible.
Yeah, that's a great point, and it's been talked about a lot in the past. This whole quality advice review is looking at how to make it more efficient and how to give people access to great advice. They're looking at these sort of barriers, I suppose, that, the documentation. Does everyone need a statement of advice, all those sort of things. Like, we're not here to solve all that today, but there's certainly a lot of work that needs to be done by the government. But I think they do need good advisors like yourself to keep pushing them hard and telling them, well, this is some issues you're seeing on the front line. Because ideally it'd be great for more people to get access to people like you and your firm who are doing the right thing and have a great solution, but it's obviously quite limited because costs and time and all those sort of things.
Yeah, definitely, it is, and we can't be, we're not a charity and we can't run it efficiently. And the other thing is that in there, the technology cost is very high because of the amount of different types of systems you need in place to run your practice. You can't just run it off the back of an Excel spreadsheet or one CRM. You need a lot of systems that interlink and make it all work. So that cost has gone up, and the labour cost has gone up as well. So the cost, because the input and the requirement to deliver has increased, the cost of labour in a financial planning advice firm has increased because we need to get much higher skilled individuals supporting the business than we used to in the past. It can't just be anyone that does a bit of administration. It's someone that knows and understands all the systems and processes and can deliver in that way. And that's a big thing that's added to cost, huge cost. I guess the third thing there is, whilst we may not have the rental and office costs that we did in the past, but the advisors' costs have gone up because industry has gone from 30,000 advisors down to, I think, 18,000, and it's about to come down to 12,000. And it just basic maths. The number of financial advisors in Australia is halved. The number of people reaching and going through retirement is pretty much doubled in the last 10, 15 years. So we've got half the amount of people serving twice as many potential clients. That's just the retirement people, not the people that are in the accumulation phase. And of course, we're all living a lot longer, so people are advised for a much longer period of time. That whole proposition has increased costs, and the only way the costs are going to come down, and then the fees, is efficiencies and process and delivery in a way that meets all the requirements for compliance and gets the clients a positive outcome that they feel that they're getting value. But if the cost keeps going up and up and up and up, it's going to basically have a reverse effect on what the government's trying to achieve, and there's going to be more than 80% of people in Australia not receiving advice on their longer term plans,
which is a big issue. Well, Scott, I mean, there's been some great talks there for people listening, whether they're advisors or in consumers or people in the industry. I think, getting your insights. Someone who runs a great business, has been around for a while. Not trying to age you too much, mate, but I think it's hopefully helpful, and there's some ideas there, tax deductibility, bringing some of these efficiencies in. So, really appreciate your thoughts and your time today. Any last comments you'd like to make?
No, just really, I think, from an advisor's point of view and a professional's point of view, and having been around for a long time, I've been through so many different changes, as you have, Nigel. FSR, FOFA, all these, every year or two, there is different regulatory compliance changes, and most of them are put in place because a very, very small percentage of people in our industry stuff it up for others. 99.5% of people who provide advice are doing the right job, doing a good professional advice service, and are not trying to steal money and rip people off. And I think those measures that are put in place that we often complain about and feel that it's a hindrance to us is protecting consumers, and it's making sure that they do have fallback, and there is, if something does go wrong, they can have legal standing. And whilst you may have the trust, but you've still got to have that framework. And my only thoughts are that you've just got to keep just keep rolling with the changes and adopting those through your business and implementing that as it comes, and that will be a constant, the change and the background framework that we're running behind. That's always going to change, not only technology but compliance. And if you can manage through that as an advisor, then you're going to be way ahead of the curve, because there is a lot of people out there that need advice. There's plenty of advice requirements, and that's not going to change. That's going to increase.
Well, again, thanks so much. Really insightful insights there. It's been really good to chat again with you, and I hope everyone has found this really, really informative. Well, thanks, Scott.
Yeah, okay, no problem. Thanks, Nigel.
You've been listening to The Future Financial Advisor. So if you've been enjoying the show, please make sure to share it with your network and leave a review on your favourite listening platform. Or if you've got some ideas or thoughts or would like to come on as a guest or know someone who would be a great guest, then please let me know. To learn more about Scientium, just go to our website, scientium.com.au, or look me up on LinkedIn. Look forward to speaking with you, and see you on the next episode.